My hair's looking crazy. Let's send this. Are we live in 5? Oh, that's not 4. 4, 3, 2, 1. We live? Let's go! So, welcome back to another episode of Ask Someone Else with myself, Property by Kaz. As always, we're going to have a special guest on, which we're going to do, of course, this week, who we'll be inviting on very soon to talk to them about their journey in property. This week, we're going to be joined by somebody who's going to tell his story of how he went from being thousands in debt to having multiple streams of income in property. As always, if you know anybody else that will be interested in getting value out of today's session, then make sure you forward this. You can just click on the little arrow in the bottom right and you can send that to everybody that you got online so you can get all of the great value. You can get as many people in as possible. I'm going to invite the man himself, Isaac. Let me find him. Okay, so I've just invited out Isaac Property. So hopefully he joins very soon. In the meantime, as everybody's weekend, I hope you're good. Myself, I decided, like a lot of people have in the new year, to try and get back to the gym, which isn't, I feel like I'm feeling my age. I'm starting to get a lot tired coming out of the gym. I think I can't name a body part that doesn't hurt. We managed to go 5 days this week, so hopefully that continues. But yeah, what's everybody up to? How's everybody's weekend been? Everyone been good? Anybody got any stories they'd like to put in from their experience this week in property? Have you put any offers in? Have you viewed anything? Have you learned anything? Are there any good videos that you think you'd like to share that people can get value from? Let's see. So just some general sort of housekeeping. If you've got any questions, try to use the question box, because that means that you will get, like, obviously everybody can see your question and everybody else can see the question. Hopefully people can get more value from the question, know exactly what's being asked, and we don't get a duplicate of questions. And it also means it won't get missed as well. Isaac, I've just seen that you tried to join and weren't able to. Maybe you can request to join. If that doesn't work, you may have to update your app. COVID ruined your weekend. That's no good. Why? This new COVID though, I mean, I don't want to downplay COVID, but this new COVID, the Omicron or Unicron, I don't feel like that one's the same as old school COVID. Like when I had COVID back in February 2020, that was some serious COVID. I'm not going to downplay your COVID. Okay, so I'm going to answer a couple questions while we wait for Isaac. My first question is from Kiefer, and it was thoughts on buying your council house. And I think that's a really interesting question in regards to exercising your right to buy. Right to buy can be an amazing way to get on the property ladder, because generally speaking, you get a significant discount in your home. It means you can either buy with either no deposit, or you can buy at a way lower amount and have existing equity in the property. And some people, depending on the value of their property, they make life-changing, I'm talking six-figure sums from exercising their right to buy. That being said, I think if you're already in a position where you've lived in the property for 3, 4, 5 years and you're at a place where you can exercise it, it's a great thing to do. I do think the caveat to that on the other side is that I do hear some people that are maybe, because of the idea of right to buy, are waiting to get onto a housing list to be able to get a council property. And you think, okay, you might have to wait, depending on circumstance, it might be 1 year, it could be 5 years that you're waiting to get onto this list. By the time you've waited to get onto this list and in a position to be able to exercise your right to buy, property prices might have shot up so much to the point that if you were in a position to buy earlier on, it's kind of chicken and egg what you should have done first. I do think there's always considerations. It's definitely circumstance led, but yeah, it's an amazing opportunity if you are someone that maybe isn't in a position to buy otherwise. I think you just said they're offering you a property for £90,000. Now, obviously, £90,000 is relative to where the property is, but I mean, if it's in an area where £90,000 is way less than the going rate, that is a great opportunity. I think while we wait for Isaac to join, again, I'm gonna let you fire some questions at me. It's been a long time since I've done my own Q&A or anybody sent me any questions over. And I'm tired, so you got to keep me awake with some good questions. Don't worry about using the question box. You can put them in the chat for now while we're talking. And whilst we wait for those questions to come through, I think I'll just update you on what's going on with me. So the property, the lane, we've got one under offer. Well, we have both under offer, and one of them unfortunately fell through. So we're going. Oh, I think Isaac's here. Let's see if we can get him on now. Yeah, one of them unfortunately fell through, which means it went back on the market. But that one's looking good.
Hey, Kazi. So sorry, I've had crazy technical issues with Instagram. I'm not sure what's going on.
Did you not update your app?
I don't think I have. I've been painting all day, so I'm not. I don't think I've had.
What have you been painting, eh? You've been painting me, or you've been painting a house?
Painting a house. Not you, unfortunately. Not yet. My skills are still getting there.
Okay. All right then. So Isaac, thank you for joining us. As always, I was saying we always got a special guest on. I took the title of this Instagram live from your bio. I hope you don't mind.
No, that's completely fine.
The bio was from thousands in debt to receiving multiple sources of income in property.
Yeah.
And that's nice. I think one thing that I actually asked you to come on this Instagram live a little while ago, and I think your response was, "I'm not ready yet. I want to come on in a year, or I want to come on in a bit." And I think that's almost speaks to sometimes the social media culture that we feel like we've always got to be doing everything, because obviously everybody does put all their wins and a lot of stuff out there that's just really great, that sometimes we don't actually want to come on and celebrate how well we're doing, because we feel like the social media side of things means that we always put a lot of pressure on ourselves to do like even more. But I think, like, I've seen a lot of your wins this year, and I've seen you're making really good steps. So do you just want to speak about your background and your journey a little bit?
Yeah, of course. And thank you, by the way, because you definitely pushed me to go a little bit out of my comfort box. I don't know where the humility aspect comes from, where you're too humble to shout about what you do, but it's definitely something that is reflective for me at the moment, where I'm like, actually, I should be telling people because it could inspire someone. So yeah, thank you for that. So yeah, a little bit about me and my journey so far. Wow, where to start? I think very early days, someone asked me the other day, where did property come from? Why is it that you're so into it? And I actually took a moment to think about it, and it actually really started from my family. So my family originally come from Uganda, and basically they I don't know if anyone who is African, land is a big deal. So they've always had this instilled in me, is that you save your money and then you send it across to another land, and then you buy some land, and you basically don't get a chance to enjoy the cash. So I think that was ingrained in me from early. And then I guess 2018 was a real milestone year for me, because my mum sent me a challenge. Basically, it started with my mum. She sent me a challenge. She said, "Isaac, can you buy a house by the end of the year?" And even though I always knew I wanted to get into property, I'd read the books from multiple streams of income down to Rich Dad, Poor Dad, all of that stuff. There's one thing to have the desire to do something, but there's another thing to take the action. And I just didn't really have something in me yet that allowed me to take action until mum set me that challenge. And I turned around and I rose to it, started saving money. And then I realized, once you're focused, once you start thinking about what the goal is, you just end up saving. You end up just dedicating and changing your lifestyle. I wasn't going out with my friends as much. I wasn't showing up to random parties, and just certain situations changed for me. And then before I knew it, I was able to save up a little bit. It wasn't a lot, just to be completely honest. I saved up $3,000, which doesn't sound incredible, but that process for me gave me a level of confidence that I didn't have before. So what I ended up doing is, so quite fortunately, I've got someone within the family network who does property already, and her name's Cheryl. Actually, she's my girl. She's my girl's sister, and she turned around and she said she'll mentor me, just to help me through getting my first property, all of that stuff. And she kind of showed me the ropes and stuff like that. So once I realized this is doable, I understand this stuff. Put an offer in for a property. Well, I put an offer in for quite a few properties. Bearing in mind, I only have 3 grand. Put in these offers, lowball offers, trying to get a good deal, and one of the offers actually came through. And what was interesting with that process, I put the offer in, which the property was up for something like, I think it was 220. I put an offer in for 170, and then the seller came back and said, okay, would you accept 200? And in my head, that blew my mind, because I was just in my head, I was thinking, why would someone drop their prices so low? But because I took time to understand their situation, I knew that the price that I was giving them, or the purchase price that I was offering, was fair, for both sides. And I think that was the trigger for me. That's what made me realize, okay, if I can solve problems, if I can help people sell their properties quickly, or whatever it is that the situation is, not only can I buy properties at great prices, but at the same time, I guess to some extent, it just, as long as I had the confidence in myself in order to do it, then I should be in a position to actually do quite well. And that was where it all started. And then since 2018, it's been a whirlwind. Like, I did a lot of education, from 2018 to probably 2019/20. Went through the usual companies that you definitely know about. Everyone knows them. They're all online. And I spent quite a bit as well, just...
Oops. I think we lost Isaac. I think he's frozen. But I'm sure he'll be back very soon. In the meantime, I'll fill in some gaps. He spoke about the properties, the companies, sorry, that we all know in regards to training. I don't actually know, because I'm a bit older than Isaac. I didn't really do any training. I kind of just did a lot of learning while doing, and then later on, I just sort of got just on YouTube, learned so much from YouTube, but I think there are a lot of good coaches out there now, and a lot of good people that you can sit and learn from. One of the reasons why I do this and why I try and put out as much information as possible is, I think, just like Isaac said, like property as a whole, it's like sometimes it seems from afar, as you look at it and you think, like it would be great, but that's not for me, or I can't do that. But there are loads of steps and ways in which to get into property, and things that you can do in the interim, even before you buy. Because I remember, obviously, I have water at this stage, but I remember with Sharina, he was running like the property club and doing clubhouse rooms and talking to people about property all the time. And I think when you indulge yourself and look into, just spend all your time in property, one, you're naturally going to network. Two, you're going to learn from people that have done more from you. You're going to be inspired by people that have got inspired, that have got loads of courage and charisma, that have maybe done less. And I think just taking time to to involve yourself in lives like this, to go spend a load of time on YouTube. There's so many things that I learn from all the time. Oh yeah, shout out Shireen, she's in the building. She doesn't actually want to come back and do my podcast though, which I think is quite rude, since she had one of the most viewed episodes of our Someone Else. But ego is a crazy thing when you're such a big banker, I guess. But I'm sure we'll get Isaac very, very soon, and we'll continue hearing about his story. Like I said, in the interim, I'll just remind you of what it is that I'm up to at the moment. So 2021, I kind of said, look, do you know what? I want to do acquisition, because these pipelines need to be strong. We can't have periods where we're waiting, and with COVID, planners got really slow. Everybody was working from home. Nobody really had that much accountability, which meant some of the deals that I would have loved to have started in 2021 are going to start in 2022. But again, I didn't want to have that issue again. So I really focused on buying. So bought a really nice bungalow, going to go for planning on that. It's going to be a full demolition and new build. So that would be nice to do a little new build, probably about a 6-unit scheme over there, circa 1.8 million GDV. So it should be a nice project. Another one for 4 flats, conversion from a residential semi to 4 flats, and that should be another nice project that we start 2022. Also got 2 luxury homes. They're going to be refurbs, both of them, creating really, really nice luxury homes. So if anybody is in that, that bracket where you're looking for a 7-figure property with, I'm talking 5 bedrooms, 4 bathrooms, walk-in wardrobes times 3, utility room, cinema, gym. What else do we have? Office. If you're looking at one of those, make sure you watch this space, as we could potentially, do it to a buyer's request, which means option for pool or tennis court. You can decide. Isaac, you're back.
Do you know what? I'm acting like I'm in a third world country. I don't know what's.
Isaac, you have to come off Tesco Mobile. You're a big property developer.
Yeah, 100%. Honestly, of all the days for the technical glitches, I have no idea. Please, anyone who's listening, this isn't normal. Please don't think this is normal for me. This is very, very.
Isaac's super organized. He's one of the people that I've spoken to. I know we've been speaking. Like I said, I mentioned Sharina's when you used to host the Property Club on Clubhouse, sort of 2021. Been really involved, and I was just speaking to like doing things to actualize your goals. Like you were always involved in property and doing things and having conversations with people that wanted to do the kind of things that you wanted to do in the future. Yeah. And I think some really good advice for anybody that's maybe earlier on in their property journey, because particularly one of the things like when you was like, oh, I don't know if I can come on yet, that I didn't like, because I was like, the conversations that people love most are the conversations that people can relate to. Yeah. And somebody talking about doing a multi-million-pound X for a lot of people is maybe too further afield from where they are in current circumstance. But you being very transparent and talking about, coming out of debt and saving money and the amount you save to buy your first property and where you've got to, I think that will resonate with a lot more people and actually inspire a lot more people than, somebody potentially saying that they're building X, Y, or Z.
Yeah. No,
so the first property that you bought, was that to let or a residential?
No, so I bought that as a residential. So I took advantage of the stamp duty, the fact that there's waivers when it comes to stamp duty when you're buying your family home or your personal home. And at the time, if I recall, I think it was something like the threshold was up to 250 and the property fell under that. So effectively, bought it 10% deposit at the time, 90% loan to value, and used it as a way in. So definitely, it was a great strategy for me. However, my intentions were always to rent it out, and so I guess what I didn't touch on probably is a little bit about my background from a working perspective. So I used to be a bank manager, and I used to work with mortgage advisors. So I knew that there was a thing called a consent to let. So I knew that the journey of, for anyone who doesn't know what a consent to let is you own your home. Circumstances change, and then what you do is you go to the mortgage lender and you ask them to allow you to rent your property out rather than you being forced to sell it. And that's the route I went down. Did a consent to let after 6 months, and then started getting the initial rent in. And then of course we did a refurb to the property, so we added value. And after 2 years, the property had gone up so much in value, we were able to make the 75% loan to value actually less. Which was the intention. Not saying I knew it was going to happen, definitely, but based on the numbers that I had gone down, I was pretty sure we were heading down that road.
And that's good. And I think for a lot of people, whether or not you have an intent to maybe let the property in the future, but I speak on this quite regularly, that utilizing your mortgage is like your residential mortgage is one of the most efficient ways you can work your capital, because if you look at it, it's like if you're looking at a £200,000 property, right now there is, the rates are slightly higher, but there's a lot of 5% mortgages, not just on Help to Buy, but on standard, standard properties that are not new builds. So it potentially, you could buy that property with a £10,000 deposit. Yes, you've got other fees like your stamp duty and your legal fees and survey fees and everything else attached. But if you buy that property, you've bought a £200,000 asset. So if there is capital appreciation over time, that's going to be relative to the value of the property. So therefore, your return on investment from your principal sum, and if you look at it, you know, like the way a property developer would look at it, like your return on capital employed or ROI, is probably going to trip what most developers are doing because you've had to put in so little money up front. And now it's not a strategy that I'm saying is going to turn you into a property mogul overnight, but capital is finite. So you have to utilize capital as efficiently as possible from day one. Now, you know, then the other side of it is, of that is as well, is even if, you know, you buy a property sometimes and maybe it's not in the exact area that you want, or it's not your forever home, it's not the property that you want, you buying that property and going up in value. Let's say you bought that property for 200,000. In 2.5, 3 years time, somebody turned around and said that property is worth 250,000.
Yeah.
You built £50,000. Saving £50,000 is a crazy amount of money. Like, you have to think what like kind of income you would have to be on to save that amount of money. The other thing, that money is not subject to capital gains because it's your principal residence, which you have exemption for. So in terms of utilizing your money, I think, and it's one of the reasons why when I talk about property investment, it often is married very closely to utilizing your 9 to 5, because a lot of negative stigmas and stuff like that is like, oh, I want to quit my job, I want to do X, Y, or Z. But having that job is what's going to enable you to get your mortgage in one of the most easiest ways that I'm sure you'll attest to as a mortgage advisor or a bank manager. And you then can, you know, take that to potentially, you know, start your property journey or propel it in a way that maybe it would have taken a lot longer to do if you were trying other methods.
I think there's something more to that as well, just to add on, because I completely agree with all of that. And I'm the number one person who always preaches. It's actually my number one question when people come to me and say, how do I get started in property? I'm always interested in, have you bought a home? Because
Yeah.
I just, that allows me to understand where someone's head's at. Because the process you go through when you're buying a home, first of all, you learn every single step that you'll learn as a property investor. You're conveyancing, dealing with brokers and advisors, being able to deal with trades if it's a project, being able to project manage end to end and all of that stuff. There's so much that you can learn from your first home. But most importantly, which I believe we're all here to do, is build wealth eventually, is you've got something that is on the right side of inflation. So it's going to go up in value. Or we can safely say, based on historical data, it's going to go up in value. So yeah, it's a no-brainer for me, and that's the reason why for me property always made sense. It's the area I always saw the clue when you're reading all of these books about all of these incredible people. Whether people had amazing businesses with great cash flow, it always found itself as a store of wealth in property, if not property, the other things, but property for sure.
Yeah, and I think the other thing about property, and especially if you're fortunate enough to get in property early, it's exciting. Like, one of the things that I didn't realize until I joined Instagram and started telling, like, was like, oh, I love buying sell houses, by the way, was that people are actually excited about property. Like, people will, not always for the best reason, but will see me like out, like in a club, and it will be like, they'll think that's the setting to be like, I've just wanted to speak about property. And then if you're in it from early enough and you build your knowledge base and your understanding and your contacts and you have all of the tools to effectively invest in property, the great thing is that as people grow wealth in all other areas, so it could be, you know, it could be as a professional athlete, as a musician, as a business owner, generally speaking, people circle back to property as a secure investment, as a secure asset class. So if you're already in a position to, you know, to make the best investments, you can then find people to work with a lot easier if you get into property at an earlier stage, which I think is a really interesting thing.
Yeah, definitely. I mean, yeah, that's all I ever talk about. I mean, people say I obsess about property, but it's keeping myself inspired, keeping people around me that are always thinking about how they can do better. And I think, you know, my past, everything that I've done in the past has led to where I am now. But it's interesting. I've done a lot of different things, but it's not about kind of where you are at the moment. It's about the journey you go on, and if you eventually land on deciding to do property, honestly, if you commit to it, you can just have some amazing things happen in a very short space of time.
Yeah.
That's what I feel like is happening for me right now. I'm in it. I feel like I'm in the trenches.
You're learning, you're homing your craft. I've got some more questions for you, but in the meantime, you know, today I don't know what I've done to the comment box. I think I broke it. Isaac has come and sabotaged my technology. So if you've got any questions, just ask them in the chat, and I'll direct them to Isaac, and I'm sure he'll do his best to answer them. And while you think of those questions, I've got a couple for you. So recently, you know, I saw you post on Instagram that you just bought another property.
Yeah.
Can you tell us a little bit about that? Why did you buy it? What type of property is, and what's your you know, your plans for the property?
Yeah, of course. So the one that you're talking about is one that we bought up north, actually, in an area called Borough and Furness. So probably about
Where is that? Where is that near?
Borough and Furness is. I feel like I'm going to get shot down because I should know my geography, but it's
There's somebody from Borough and Furness in here that's going to give us an exact geographical
location. So I will. Well, it's northeast as far as I'm aware, and it's just. So it's not far from areas like Newcastle and places like that, but it's quite far up north. So a few months, probably about 6 months ago, I decided that although I like to invest down south, I think down south is where it's definitely still where it's at. I don't believe that up north is kind of the only place where people are killing it in property. But I knew that up north there's a lot of interesting things happening. So first of all, you know, if anyone listens to the budget, I always listen to the budget whenever it's announced. The latest when Rishi Sunak talked about the infrastructure bank being up in Leeds, and you know, all of that stuff that's coming, the investment leveling up. I was like, I feel like I need some exposure to that market. I feel like I don't want to miss what might happen up there. So that's really where my mindset was. So I actually ended up joint venturing with an old friend of mine who has been doing property for the last 5 years. So his name's Amit. And, you know, he's done really well. I think he's got about 30 plus units at the moment. And he's been using a BRRR strategy. And I thought, do you know what? Someone who's ahead of me, not so far miles ahead of me. He's got capacity. He wants to. He's willing to actually partner up with me, and we can get going and create a vision. We decided that up north is definitely where we're going to focus our attention. So with this deal, just to go into it a little bit more, we purchased it for 82k. So we're looking at a potential end value. I'm going to start with the end value and work backwards. So we're looking at a potential end value of around 120. Now, there's a bit of work that ideally we want to do to the property. So things like, you know, making sure that we have a new kitchen, maybe new bathroom. On top of that, we've obviously got the legal conveyancing costs. We've got all of the transactional costs that we would have to factor in, and then add on top of that, we've done this via a crowdfund. So anyone who doesn't know what a crowdfund is, it's like a normal lender. It's like a lender, but you've got a collective of people who put money into your deal in small portions. So we had about 56 different.
Who did you do that?
So it was with Max Crowd. So Max Crowdfunding with Mark Lloyd. So it's quite an interesting model because they work on 90% of costs or 90% of costs or 80% of the end value, as long as the value can be justified by a valuer. So in a way, it's a bit different to bridging lenders who kind of don't tell you what they think the valuation is, and then they just give you a net figure, which sometimes can kind of leave you effectively trying to guess exactly what they.
Your valuer on your GDV post works or your purchase price valuation?
So it has to be the 90-day valuation at the point of purchase. But so the properties that we're buying are typically bought below market value. So they tend to be people who want to liquidate quite quickly, maybe within 30 days, and we're offering them an out within a 30-day purchase time scale. So with that, we get the property a little bit cheaper, and then we still get the valuation at the market value or whatever. Maybe it might be a little bit lower. And as long as the market value is solid and a RICS value has gone out and said what it is, then the lender or Max Crowd would definitely lend to you up to 80% or 90% of costs, whichever is lower. So that's who we decided to go down. Yeah.
That's interesting because I think that, and that's the other thing. Like I see loads of people. I had a conversation with Luigi Newton from LN Capital recently, nice guy, and he was talking about some more creative strategies that he was using. Obviously, you've mentioned crowdfunding. I think they've written to me before on one of the flat conversions. I'm pretty sure I remember that name. But yeah, and I think that's the great thing about having these conversations, that you might look, oh, like Kaz has done a lot more deals, but you might have a conversation with me and I'm like, okay, that would work for something I'm doing. Can you tell me more? And then you're
Yeah.
educated based on, you know, maybe not doing it, having done it as much or for as long. So I think that's nice. So, you know, that you're doing your refurb and then you're going to look to do a BRRR, so to refinance,
Yeah.
get that money out. So this is going to be quite a long-term partnership or JV with your friend.
So I've only got two JV partnerships at the moment in terms of the way I structure my business. The rest is, you know, stuff that I do by myself. But yeah, when it comes to JVs, I always think long term. It has to be, you know, that kind of aligned values.
Don't like people a lot of the time.
Say that again.
I said I'm the opposite. I don't like people a lot of the time. I want to be in and out, and you go away after that.
You know, it's interesting. So I've always been working in teams. So the first business I ever had, it was always a team thing because I used to do events. So for me, it's I don't know what it is. I'm not huge on building things on my own because I like the social win. I like to win together. I like to bring people along and all of that stuff. And I guess in a way, I also like the accountability because you know you know, there's that thing. We all have different currencies. I think I like to know that I've done what I've needed to do and delivered.
That is a good, because when I've done business, not necessarily property before, but you know that level of accountability that is very easy when you're running a business and you're self-employed or you're the director or the CEO or whatever fancy title you're giving yourself. You could justify not going to work because you're the boss. But when you've got a boss alongside you, you've got to both pull your weight or you know it's not going to work in the long term. So I do think there's a lot of pros and cons between like business partners, and but I think definitely more probably in the pro column as long as you pick the right partner.
Yeah, definitely. I think picking a joint venture partnership. I've seen it online where people are like JV with me through a social media post. I'll never understand that element because I think if you're going to go down that road with someone on a long term basis, I mean, if it's a short term transaction, that's different. But
Yeah,
if you're buying, it's a whole different.
it generally is just if and again I haven't JV'd for sort of 5 years, but I said I'm going to start doing it again this year because I need to start being friendlier. But generally it's going to be like, look, sole investor, fund 100% of the money because I've already found an amazing deal, and then we split the profits, and I deliver it as a turnkey project, and you know that just kind of keep it really transactional. So I do what I do best. You obviously have made a lot of money from somewhere, so you can carry on doing what you do best, and that comes together for, you know, joint remuneration for both parties.
Yeah, and would the way you would do that, would it be very much someone who's completely like they're not in property at all? They are.
They can be in property, but generally speaking, for example, I don't know, like to be fair, some people are in property, but maybe they specialize in building a buy to let portfolio and they haven't been exposed to, you know, certain things that I'm really good at in terms of when it comes to adding value through planning gain and things like that. So they would say that, look, we're more than happy to be part of this because the return potential that we're going to get from this deal is going to be something, even at 50% and putting all their money, is still going to outstrip what I would get elsewhere. But a lot of the time, you're right, they're generally people that are not typically in property. Generally, like I said, sort of people in, you know, high paid, low time jobs. So whether it be professional athletes, people in finance already, GPs are like some great people to work with because they've got no time. They know what they don't want. Very smart people, and they can, you know, a lot of the time can quickly say, "This is what I want to do," and then you can decide very quickly whether or not it is or isn't going to work for them. So a couple of people, obviously, it is called Ask Somebody Else, and you are that somebody today, Isaac.
Yeah,
so and answer people's questions. There's been a few now, so I'm going to try and fire a couple over to you. So the first one is from Melly Mel 231. I hope you're still in there, Melly. He said, 48, I'm looking to buy my first property and I'm worried that I'm too old to buy as I would like to retire early and don't want to have the 20 to 25-year mortgage over my head. What do you recommend?
Well, first of all, 48 is not old at all. This is my going back to branch hat on, because I know that some lenders go up to 85. First of all, so anyone who thinks, they're getting on a little bit and they think they won't be able to get in, most lenders will go quite far up in terms of age. But in terms of, I think it just depends on what strategy you pick. There's strategies that are very much in and out, and there's strategies that are, I think, Kazi, obviously, you've talked about doing things kind of short-term transactions and then being able to get out and move on to the next deal. And then there's things like what I'm doing, where I'm trying to build longer-term, buy and holds, where I'm hopefully going to own that property for 20, 30 years. And don't get me wrong, I might sell a few in between, and I might trade a few just to make sure that my liquidity and my cash flow is good. But it really depends on what you choose as a strategy. There's
I think you really, really well at the beginning when you spoke about like inflation. That the real value of inflation is currently about 3%. It's probably quite higher than that, but that's the rate that's put out there. So if you mainly, for example, had £100,000, I'm not saying you do or don't. I'm just using that figure as an example. Every year that's dropping. So your £100,000 is still sitting in your bank, has the purchase power of 97,000 at the end of the year. Now, different strategy, and it's about finding the right strategy for what you want, because it could be, if you want your first home, you could look at a way to try and pay that off quicker by having higher repayments depending on what your mortgage is. If you're looking at an investment opportunity, then potentially you could get a buy to let on a repayment, and you could look at something that was really safe, like some social housing contracts that meant your money was guaranteed. And it doesn't matter if you want to retire earlier, because this is going to aid your retirement, because investments are what allow you to retire and have freedom at a later stage. Now, this is not me offering investment advice, but again, generally, I think you would need to work out what financial investment would work best based on your position.
Yeah, I couldn't agree more. Couldn't agree more.
And I think that is it. Suzanne, I'm so rubbish. Suzanne Edwards, 06, said, they said, what is BBR? But I'm pretty sure it's BRRR.
Okay, so that's buy, refurbish, refinance, and some people add the additional rent, R, which is rent. So buy, refurbish, refinance, rent.
And what exactly does that mean? Just for potentially somebody who's maybe not.
Yeah, of course. So take it back to basics. You're buying the property for a certain price. Let's say, for easy numbers, 50k. Let's say you need to spend 20k to do up the property to increase its value. And then let's say all costs are an additional 5k. So you're now at 75k. And then that property is now worth 100k at that point. Well, that's probably a very dreamy deal. Let's say that property is worth 95k. At the point that you then decide to refinance, and then you leave 5k in that deal. So bearing in mind, you're getting a 75% mortgage, so the bank's going to give you 75% of what 90k is, and let's say you leave about 4 or 5k in the deal, and then you generate rent off the back of the fact that you still own the property, and you've got tenants who are going to be paying you, so you're going to get then a return on your cash. But the main concept is the refinance part, where you're able to get a bank to pay you your cash that you've spent, as well as, I don't know whether you've used a bridge or anything like that, in order for you to then put it on a term loan or a long-term mortgage.
That's it. I think that's good advice, and I think there's a really good explanation, but it's so hard to explain BRI using random numbers and the percentages without a whiteboard in front of you. One of the best explanations I've seen is from Luke's Properties, who's in here today. He does loads of reels with his whiteboard. He's famous with his whiteboard. He absolutely loves it. So if you kind of want to understand a little bit more, go to check out Luke's Properties and check out some of his reels, because they have a really good explanation of exactly what BRR is as well. But it just sort of puts it quite succinctly. Next question is from T on XO, and it's, I'm 20, I'm still at uni, I'm interested in property, but only have 2k to start up. What do you recommend would be the best strategy for me?
Nice. To be at uni, 20 and have 2k in the bank to start up. Do you know what, Kazi? I know you're going to have an opinion on this for sure, but I think for me, it's first of all, there's no rush. Like,
Mhm.
get your knowledge level up, because I think longer term, it's your knowledge that's going to allow you to do all sorts of exotic things down the road. I would, if I was you, I would even be looking to. I would be calling up people like Kazi, and I'll be like, look, can I do some? Can I add value somehow in order for me to, in exchange, learn? I think things like that, just being in the right environments. But if I was to talk straight, like genuinely property strategy type of things, obviously 2K is not going to allow you to do so much, but there are a few strategies where the entry point is quite low. One of them being rent to rent. I've actually got a couple of rent to rents myself. I don't push the strategy because it's not a strategy that I completely focus on. But I do know that the setup costs are a lot lower for those units that I decided to take on. But again, where are you going to get the knowledge from? Maybe you want to grab a little bit of that money, invest in books, invest some time in picking up a couple of small courses just to get a real feeler in terms of understanding what the technical aspects of the strategy are. Because when it comes to rent, there's certain regulations that you have to adhere to. You have to register with certain bodies because you don't want to get yourself in hot water. So yeah, I would be looking at that 2K, thinking about where you are from an age perspective, and I would be saying you don't need to run, get your knowledge up, find ways to get that knowledge up, and then make a decision when you're ready. And when you make a decision, it won't matter whether you've got 2K or not. You might decide to go a certain route and use someone else's money. So the 2K isn't a blocker, but your knowledge will pay you dividends forever.
Yeah, I think just to add, I think so. I think I'll leave it with your answer. The only thing I'll add is that a lot of the time, the best investment you can make is in yourself because you're going to be the primary driver to success in whatever vocation in property you go into. So I think working out what you want to get out of the property and then going to do the relevant research to find out which strategy is most likely to deliver you that. Because although deal sourcing or rent to rent might have the lowest barriers to entry, they might not align with your long-term goals in property, and therefore it might make more sense to focus on you and like growing your own knowledge as opposed to diving straight in. So I think really work out what it is that you want to get out of property and then find a strategy that aligns to that. uh, da, 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 da. Inspire Property hasn't got a question, but just says they're loving the chat and they're waiting on a completion date for their first buy to let. So congratulations.
Right.
That's something that we always want to hear. Hope it goes very smoothly. You've got a great solicitor. We'll try and fire through a couple of these ones because we're probably going to be closing up in about 6 minutes. So what is the best way to find JV partners? And that is from I want to say Holloway Properties UK.
Yeah, of course. I like this one because I can't tell you what the ultimate best way is, but I can tell you what's worked for me. So first of all, what I definitely did is, I did the whole list thing. I wrote down all the people in my network who I thought would be my potential JV partners because I maybe made the assumption that they had money in the bank. But what I actually realized is the people who ended up becoming my JV partners are the people that already knew me. There was already that, know, like, and trust factor. They've been watching my journey, so it wasn't so much what I'm doing on social media, because at the time I wasn't really on social media. It was more to do with my consistency, the fact that every time I spoke to them, I was always talking to them about the same thing and giving them updates, and making sure that they're aware that I'm actually doing this thing called property and how it works, and getting them into the granular. And then the next thing is just trying to understand where someone is and what they're trying to achieve. I'm quite a curious person anyway, so I always ask financial questions. I'm always asking people, all right, well, how's things going? What's your plans for your money? If someone tells me they've got money sitting in the bank, I always want to know what their plans are. Are they actually aware of what return they're getting? What do they want to achieve? What are their long-term goals? And I think if you have continuous conversations with people who are close to you, and you make sure that they know that you are the person who is in property, I find that the best JV partners are the ones that tend to be closer to you, the people that already know you. And then when you start to understand a little bit more about what JV partners probably are looking for, maybe you might venture out a little bit more and start looking beyond your network. But you've got to be very clear about what it is that you're offering as well. So, you know, what's the JV partner getting for their investment? You know, what involvement do you expect from them, and what is it that you're going to bring to the table as well? And
Okay. From that, I've taken as the headline: start with your warm leads, show what you bring to the table, be clear and concise in what it is you expect from them,
yeah,
and make sure you're able to deliver. And
100%.
that's good advice. I'm gonna like touch on this question, but very briefly, but more so because the question itself is gonna answer itself in this person's DM. So A97 has said, advice for first-time cash investor based in the Northeast, no mortgages. And I say that because you saying that you're going to be inundated with people telling you potentially want to JV with you and potentially have different deals and different strategies for you. But just very quickly, because I've got a couple more questions for you. Any advice for somebody wanting to invest in the Northeast of England with no mortgages?
Northeast of England, look, do your research. It's very, if you're, I'm assuming you're not based there, so just the fundamentals don't change. You know, even if I'm investing in my back door, you still do the research. You still need to understand that where you're investing has all the things around it. So, you know, for example, if you're targeting families, then make sure that where you're investing has good schools and all the different things that families look for, whether it's commuting into a nearby city. So you really just want to do your due diligence no differently to any other area. But if anything, you want to do that little bit more. Maybe just a little tip that I would give is take advantage of letting agents. Letting agents will give you loads of information about an area, especially the fact that they feel like that you might be their next customer in regards to taking on a property. So, you know, don't and go up there if you feel you need to go up there, have a feel for the area, you know, stay overnight if it's going to be an area that you're looking to invest quite heavily in, because literally road to road it can be different. I've heard horror stories of people investing in the wrong areas up there, and I'll be honest, I'm being navigated by a JV partner who's already invested up there, so I'm not going in cold. But if you are going in cold, definitely make sure that you do your research. I can't stress that anymore. So yeah.
I think that's good advice. Do your research, but like I said, I'm sure you're going to be inundated with messages of people telling you they've got the next strategy for you. Just make sure you do your due diligence on them and any potential investments. But I hope it all goes really well for you. My final question for you, Isaac, and it is brought to you by who was it? Let me scroll and find who asked. It was JPP 21. I said, Isaac, is that a friend of yours?
Yeah,
Oh,
JPP's
it's always don't recognize the name. 21, friend of Isaac, said, Isaac, what are your goals for 2022?
That's a nice one, man. I like that. So, do you know what? I've got a few goals. One of them is quite an ambitious one. So, in my joint venture partnership, we have a target to generate 5,000 net of rental income in our property business using the BRRR strategy. And then there's a few other, being online more. There's a lot of goals around there. I want to actually do my first block conversion by the end of the year. That doesn't particularly mean it's going to be loads of units. I'm not talking about, 10, 15 units. I'll be happy with four or, two to.
I love smaller ones. No Section 106, no affordable housing, no lift shafts, no exuberant requirements, no ridiculously long planning. Don't get lost in the numbers. It's all about, if you've got a finite amount of capital, it's all about how efficiently you're working that capital. What is your return on capital employed?
Yeah.
And just focus on that. Because if your return on capital employed is way better than somebody that's doing a massive project, and then when you annualize that, you can do it way quicker. You might find out that you're using your money way more efficiently. Just going big isn't always better. And, being better isn't always big. You just got to find that balance of what works for you.
Yeah, definitely. And I think one last big goal for me is just I'm expecting a little one. If you follow me on social media, you'll probably know that already. So I think for me, it's about finding balance, and I don't know how to. It's more intentional. It's an intentional goal as opposed to a tangible goal that everyone talks about. I don't know, Lamborghini or whatever people aim for. This one is really just to have the balance to be able to be there for my daughter who's on the way. So I think what that looks like, it will show up with time. But I think that one's really it's gonna be the glue for a lot of things that I've got on the jotter pad that I want to achieve.
That's good. They're good goals. Definitely. I mean, you married a lot of things up. You've got new expenses coming with a growing family. So you having that cash flow of £5,000 a month is really going to help. I think one of the great things about social media is also accountability. So we've seen what Isaac said he's committed to. If you haven't already, make sure you go and follow Isaac so you can hold him accountable for his £5,000 cash flow plans, as well as everything else that he spoke about that he wants to achieve. It's a really nice, open guy, and definitely somebody that I would recommend connecting with. As always, each and every one of these episodes is going to be available on the YouTube. We're really pushing the YouTube right now. We're currently at like 4,750 subscribers, so going towards that 5,000 milestone. If you're not already following me, make sure you follow me. I think I'm a couple hundred followers away from 50,000 on the Instagram. We're trying to get to that. I'm going to do a big giveaway when we reach there. Every week we're going to have another guest on the Ask Somebody Else. So make sure you reset this time, this reminder in your diaries for every Sunday at 6 p.m. Isaac, have you got anything else that you want to pitch to the people?
Do you know what? I just want to shout out you, to be fair, because I think people need to understand what Kazi does in the background. I know he's a very big he's a big public figure on social media, and people see the face of your brand, but they don't know what you're doing in the DMs. I've reached out to you a few times. Always been picked up
fingers and trouble with my thumbs.
Yeah, exactly. So I think it's important to just highlight that you are in this to really see people do well, and I think that's something that's quite rare. And also, just to be frank, seeing someone who looks like me gives me the confidence that actually there are spaces for people, and there is a lot of diversity in it. Yeah.
Do you know what? My battery died. Like, it didn't die, but it said 20%. So it like muted you. So I muted you for a little while, but I heard some of it. And yeah, just thank you for, do you know what I mean, for the big up. And sometimes you need a little pat on the back to keep going. But I think my thing is this, that like you said, there is an old stigma that, property investors or landlords look like our parents, or like don't even look like our parents and don't look like us at all. But there is so many ways to get into property, so many opportunities to build wealth, to build relationships that can allow you to build wealth either now or in the future. I meet so many different people and I have conversations. Like literally, like today, I had a conversation with a guy that said, after the back of that consultation, I've just put my offer in on that semi. After the back of like this conversation, I've decided I'm going to go for a 7-bed rather than a 4-bed HMO. And I remember like my pivotal point where I was like, I need to put this out there more, was I went back to my first ever development. My first ever development was an ex-capital, it was a housing association sale that I bought at auction because they were disposing of their assets. And it was this guy, like in African culture, we say uncle. He wasn't much older than me, but like, if I was 22 at the time, he might have been mid-30s. So when I went back there, he was probably late 40s when I went back, like sort of 8 years. Well, no, sorry, mid 40s when I went 8 years to that development. And obviously at the time, he was like, well, I was just speaking to him, and I was like, Uncle, why are you not, like, you've been here for 10 years, why are you not trying to buy this property? It's a good road, you should try and buy it. And then when I went back there 8 years later and I saw him, and he was like, Kazim, I've bought the property now. He said, he bought it. And he bought it, and he brought his son out. He's like, look, like I bought it, and then 5 years later, we bought it under like the Help to Buy with the housing association. We bought it, got a reasonable discount, and now I bought a buy to let. And you know, I've got my son, and so now I know that I feel safe, that I've got something for my son. And I was like, that's beautiful. The fact that little conversations that I was just having off the cuff, like, oh, you should buy it. So the fact that now I've got a platform to put these conversations out there that hopefully will help other people that were umming and ahhing about whether or not property is for them. Hopefully that this furthers them and furthers their journey. And I know you're going to go and smash it this year. I know that, you know, everybody in here, there's 59 people in here right now, but over the course of the last close to an hour, I think there's been about 500, and hopefully everyone picked a little something from it that resonates with them and means that they're going to go and smash it and fulfill whatever it is that is for them, because whatever is for you, no one can take away. And I'll just like to leave it at that, my brother. But again, I appreciate your time. I'm sure people appreciate you. This is Isaac. Give him a follow and enjoy the rest of your weekend.
Thank you, man.